If you don't know much about Bitcoin, cryptocurrency, blockchain, or distributed ledgers, you're going to love this week's podcast. We got one of the leading experts in this space, Alex Saunders, to demystify it all for us. What is it? How does it work? What benefits does it offer? Should you own any? If so, how should you buy it? Keep watching this video and all will be answered. And as always, please click on the like button below to help us continue the run of amazing guest experts like last week's James Grant that we've been getting on the program of late. The more likes these videos get, the more big names we're able to attract. And now let's watch this week's market update featuring crypto expert Alex Saunders. Hi folks, Adam Taggart, co-founder of Peak Prosperity here, welcoming you back for another week of making sense of these markets. This week, we're having another expert guest based upon feedback that we've received from you, our viewers. We've had a number of folks asking if we would bring on a Bitcoin, blockchain, cryptocurrency expert onto the program. And because we're good friends with the guys over at goldsilver.com who are into all things crypto, they recommended today's guest, Alex Saunders. Alex has been immersed in cryptocurrency since first discovering Bitcoin in 2012, and then later founding the Nuggets News Media website and its associated popular YouTube channel. He's a trusted voice in the crypto community. He conducts many speaking engagements to help educate the world about these products, and that's what he's going to be doing here today with us. And he does his best to help accelerate worthy blockchain startups. Alex, thank you so much for joining us today from Australia, no less.
Yeah, it's a pleasure to be here, Adam. And I guess I should say a special thank you because Peak Prosperity and Crash Course was a big part of my journey down the rabbit hole after the GFC back in the day. So hopefully I can live up to those expectations, although there's no experts in the crypto space because it's such an emerging area. But I'll do my best to educate everyone today.
Well, thanks. That's an honor to hear that we played any role in your inspiration here. I will push back on you, though. I think the crypto space is so poorly understood by so many that even somebody who understands even just it halfway is an expert in my book here. So again, for today's video, we're going to largely be talking to the general viewer here, assuming folks don't know an awful lot about cryptocurrency, because I do think from hearing from our audience, 90+% really don't feel like they understand it well enough or really at all. So Alex, just to get us started, for the newbie, can you just explain what the core value of cryptocurrency is? And also, I'm using the word cryptocurrency. I hear other people use blockchain. A lot of people would just say Bitcoin. What's kind of the right way to generally refer to this space?
Yeah, that's very true, because even the nomenclature, as you say, is confusing because people use the term cryptocurrency and Bitcoin was the first one. But these days, a lot of them we refer to as digital assets is probably a better term, or distributed ledgers, because many of them are not trying to be currencies like Bitcoin. And even Bitcoin itself is a different kind of technology than just trying to be a currency with some of the properties it has. So I guess the basic proposition here is that it's a distributed or decentralized ledger. And all that means is instead of having a bank that's in charge of all the information, or Facebook that's in charge of all that data on their platform, we have a ledger where anyone can run it or keep a record of it and update that ledger, and everyone has to agree on what is happening. So if I send you some Bitcoin, Adam, it's like the network has a heartbeat almost, where all the computers are constantly saying, hey, do we all agree on that? Did Alex have those Bitcoins to send Adam one of those Bitcoins? And because that is happening, then there's no way to censor those transactions, where YouTube can take down a video if they don't like something you've said, or the bank can freeze your account. So this is what we say censorship resistant, decentralized. It's just an open system where anyone in the world that has access to a phone or a basic device can open a Bitcoin wallet. They can receive Bitcoins, send Bitcoins to anyone. And it's just a very open, fair system.
All right, so it sounds like, a key benefit there is that no one entity controls it, right, to your point. So you can't have, maybe a bank freeze your assets or whatnot, or you can't have an entity necessarily arbitrarily control the supply. They can't just decide to issue a whole bunch, tomorrow, the way that a central bank can today. I also presume there's probably a lot of efficiencies as well that get unlocked with this type of technology versus sort of the status quo solutions.
Absolutely. It's very early days. So a lot of the time you'll hear about how Bitcoin is very slow, can only do 10 transactions per second, whereas Visa and MasterCard can do thousands. So in that regard, it's like the internet in the early days in some ways. You know, if someone came along to you and described the internet in 95 and how you had to, type in these complicated letters and numbers to send an email, it would go over most people's heads. But things have got better and better. We went from dial-up internet to broadband internet, and now we're sitting here anywhere in the world having a high-definition video conversation. And that's the progress, I guess, the general roadmap that will happen with Bitcoin and these other cryptocurrencies, where it's going to get better and better, because at the moment they are a little bit slow and a little bit clunky and a little bit hard to use. But many projects that are building on top of these ledgers or trying to improve the ledger itself are trying to solve these problems and make it easier for the average user so that they don't even know what is happening under the hood. Just like when we use an app on our smartphone, you don't need to know what is happening with the protocol in the app.
Okay, so we try to look through sort of a economic and markets related lens on this particular program here. And I want to try to divide kind of the conversation in half here.
Yes.
First question I'll ask you is really about, because these offer a way of doing things differently and perhaps a way of doing things more efficiently, effectively than done in the past, what's sort of the general outlook in terms of the economic value that these digital assets, decentralized ledgers, et cetera, are going to have on the general economy? Is it going to be a huge impact? Is it going to be a marginal one? What are the current sort of prognosticators thinking?
Well, I'll probably start with Bitcoin because that in itself is a whole world to unpack and understand. And then the separate basket that I'd probably categorize them as is technology plays. And we might get to that a little bit later. But in terms of monetary plays and being a currency, if we just focus on Bitcoin, it's different things to different people. So in some countries, let's say there's capital controls in China, and this was one of the big drivers in 2016, you weren't able to send large amounts of money out of the country. And so anyone that started using Bitcoin was able to now do that. And once again, you have control over your money. If we rewind a few years before that, in Cyprus, it was the first time we'd seen those bailouts when everyone got a haircut and got told that they were, their money was no longer theirs.
Just to correct, that's a bail-in, but yes.
Oh, sorry. Yes. No, you're right. Bail-in. And for the first time, those people went to Bitcoin, and Bitcoin had its big run up in price from $200 or $300 up to $1,000. And you'll remember that the ATMs were empty and you couldn't get money out. So all of a sudden, Bitcoin became appealing for those people to just hold their own money and be able to send money overseas to family and friends or whatnot. So Bitcoin is different things to different people. And these days, it's taken on even more of a value in its scarcity. So as you pointed out, the government can't decide to print $3 trillion and then Trump wants to spend another couple of trillion here and there. And I think the stat is the US M2 money supplies increased 22% this year, but none of you guys in America, I should say, had any say in that. So you've effectively been diluted 22%, all things remaining equal. In Bitcoin, that can never happen. So it is a scarce asset. And I'm a big fan of gold and silver still to this day, as I was 10 years ago. And most of your audience are very familiar with that value proposition of holding the gold and silver. Governments can't print more of that. So in those ways, it's like a digital version of gold that can't be printed any more of.
All right, and I want to get more into sort of the monetary aspects and some of the other sort of investment aspects for the average individual investor. But real quick, just to continue tugging at this thread, and I could take a short answer here, but in terms of the disruption, the transformation, in terms of the impact that folks are expecting these digital assets, distributed ledgers to have on the economy, is it going to be transformative in the way that like the steam engine was, or the internet was, in terms of replacing atoms with digital bits, et cetera? Like, is it going to be on that level, or is it just going to make the things we currently have work a little bit better?
No, I do think it is a whole new system. The best biggest technology since the internet. And that's in those two baskets again. So I think money is the biggest thing that needs to be improved for people all around the planet, whether it's hyperinflation, freezing your bank account, taking that money off you. There's so many reasons why we need a new monetary system, either for payments or as a store of value, or just to protect your wealth from the system that is crumbling. But then we also have the technology plays, which are more like Ethereum, which is the second largest digital asset. They're trying to build a ledger, which is almost like trying to build a new internet. And so instead of Facebook, Twitter, YouTube, all these big techs that are being dragged in front of Congress at the moment for abusing your data, censoring, force feeding certain ads to you. Let's rebuild the internet with a fair and open system. So again, anyone can build on that. Anyone can use another person's app on that. There's no censorship. So I think those two areas of money and payments, and I guess data and the internet and technology, they're just probably the two biggest areas in the world at the moment, and they're both ripe for disruption, and that is coming.
All right, fascinating. And I'm no expert on this, so I look to you to correct this statement. But one of the big values I see coming from this whole sort of distributed, non-controlled future that you're talking about is that it really does sort of disintermediate, right? It takes all the middlemen out, which of course unlocks value, but it also keeps somebody from a Facebook or whatever, where they basically create an advantage where you have to work with them if you want to, operate in the space that they're in. Is that a true statement that I just made?
100%. You hear the term peer-to-peer crop up so many times when we talk about these assets. And what that means is that any business or any industry where you feel, hey, is there a middleman, or is there someone that we need to trust? Is there someone that is controlling what we're doing? Is there someone that's taking a fee? All of that gets removed. And so when I want to send $1 from Australia to someone in Africa, for example, because let's say they've started up a blog, there's no way for me to send them $1 through the traditional payment system, or even $100 that would get eaten up in spreads and fees, and they might not even have a bank account. Now, as long as that person has a basic smartphone, I can send them that money because there's no intermediaries with the overheads, the staff, the physical location. So it cuts out all of that. In the technology world, we're cutting out that middleman that's collecting all our data. Again, they've got those overheads. So what it's effectively doing is using software as the middleman rather than a business and having all these expenses. So you've heard the term software is eating the world. This is truly software, but it's peer-to-peer software.
All right. So shifting now a little bit to sort of the part two of the focus I wanted to get to, which is we talked about sort of the impact on the global economy. Now let's talk about the impact on the individual. What do you see as sort of the biggest reasons and benefits today? Because I understand that there may be more in the future as the technology becomes more distributed. But today, for somebody to invest in cryptocurrencies, is it solely to protect wealth, sort of thinking it as like a digital version of precious metals, or are there other investment opportunities for return? And we've all heard about sort of these ICOs and things like that. And I think a lot of people think, it seems like there's a lot of snake oil salesmen out there. So just sort of help the average person understand how they might be able to play and navigate this space, if you can, Alex.
Yeah, so I want to be really clear, and my message hasn't changed over the past 8 years. 99.9% of these cryptocurrencies are scams, or they're going to fail. And so if you want to invest in this space, you should very much be starting and sticking to Bitcoin until you're confident that you understand what's going on, because everyone's got something to sell you. Everyone's got the next big thing. And so often they're scams. So what we do, for example, in our business, and this is, I guess, the more advanced stuff, is doing a lot of that research and trying to find that 0.1% that are good projects and good technologies, good digital assets. So I think if you're looking at them as a investment, you have to acknowledge that it's a highly speculative area, a little bit like penny stocks and almost like the dot-com bubble, where we had the pets.coms and all of these things that blew up. But we also had dozens of companies that came out of the ashes that were game changers. So that is one way to look at it. But the other way is that Bitcoin is almost a speculative store of value, I call it, because it's wildly volatile. And some people say, well, that's not a good store of value. But if you look over its history, I think the stat is 96% of the time you're in front if you had have bought Bitcoin. There's only 4% of days where you could have bought it and you'd be behind. So yes, it's volatile and it goes up and down, but hey, gold went from 1900 down to 1050, silver went from 50 down to 12. That does not mean that they haven't been a brilliant store of value over time. So you've got to zoom out, really dollar cost average. And so often in the crypto space, people flood in, the newbies flood in when the price has gone up and it's in the media. And that's the worst time to be putting all your money in. So for a lot of people, it's about just buying a little bit each week if you're treating it as an investment. But for billions of people on the planet, it's not about that at all. It's about the fact that they're unbanked. They don't have a way to store money, hold their own wealth, participate in e-commerce, start an online business. So that is what it's really all about. And that's what excites me. As much as it's fun to make money and invest and go up in price, it's the impact that it's going to have that I think is the most exciting thing.
Well, and what's really interesting about that is, part of what has kept those people from getting access to sort of modern day banking services and stuff like that is there are parts of the world that just don't have a lot of internet connectivity and whatnot, especially in the developing world where there's lots of population. They're not necessarily very rich on a per capita basis, but they could become, transactors. And you've got, in addition to the digital distributed ledger solutions that we're talking about here, the digital assets, as you call them, there are also sort of parallel initiatives like SpaceX's Starlink program, which is going to be basically carpeting the planet with, fairly decent broadband connection for anybody anywhere on the planet, right? Where it's all of a sudden going to, give those people an on-ramp to be able to start, using these types of solutions and stuff like that. So it is a very exciting time. There's a lot going on there. I don't pretend to know much of it at all, but I think if people follow people like you who are tracking all these things, they'll get a good sense of what the big opportunity is. I do want to ask a couple of quick questions because I know they come up in people's minds either as a reason not to get into Bitcoin or other cryptos, or it just makes them nervous. So a couple headlines I want to run by you. One I read recently was that there was a report that came out that there's about 1,500 Bitcoins that are lost every day. And if you know Bitcoin, in theory, there's supposed to be 21 million of them, I think, ever. And now they're saying that given that so many have been lost and whatnot, it's probably only likely that about 14 million coins will ever circulate. Does that raise any real concerns, or because Bitcoin is just sort of so divisible, it almost doesn't really matter? What's your thoughts on that?
The easiest way to think of it is if you're a gold and silver investor and a report came out that 25% of investors had been burying their gold and silver in the backyard and they'd forgotten about it or they'd passed away and that was out of supply, is that a bad thing for gold or silver? Not at all. It's just reducing the supply a little bit. Does that mean that someday in the future someone might happen to stumble upon those? Maybe someone might happen to stumble upon that person's hardware device and find their password written down in the future, and that those coins come back into supply just like that gold and silver would come back into supply. But no, these things are divisible to 8 decimal places, or we can even go further actually, which I won't get into for other reasons, but it doesn't change things at all.
Okay. And sort of on a related note, I'll tell you one of the things that I don't like about Bitcoin when I think of it as a replacement currency. And I'm happy to be re-educated on this. But is that it's something like 1,000 people own 40% of it. And so, I think, all right, if we're going to introduce a new currency into the world, why would we allow so much of it to get concentrated in so many people's hands early on, so the rest of us are just sort of fighting over the remaining extra half? What's your reaction to that?
Yeah, no, that's definitely a fair statement. I think I'd want to look at those stats because Bitcoin is one of the more fairer distributed systems that we have because of the way that it was mined into existence. So no one really got any to start with. So in some ways you can say, well, it's fair because all those people that were early on and took those big risks, people that quit their jobs to work on this technology and spread the word, a lot of those people are now the wealthiest people. And so do they deserve it? Because every idea has to start somewhere and it has to be the first few people that have the most. So the more and more that it gets spent, the more and more it spreads out. And I think it is a reasonably fair system. A lot of these other currencies, cryptocurrencies, you'd find would be far, far worse. And I know for a fact that Ethereum and Bitcoin are the two fairest. So whether or not those top 40 addresses that are quoted in what the study that you read were the exchanges or things like that, where there's a lot of addresses that have a lot of the coins, I still think that over time, more and more people will spend this and the currency will get dispersed out over the planet. Now, the thing that's important to understand as well is that the new Bitcoins that are coming into supply, that inflation rate is decreasing by half every 4 years, and we're down to about 1% now, about 2%, sorry. So why this is important is that what's happening at the moment with macro and currencies, we're printing more and more. So 3 trillion in the US in the last few months, and that is being concentrated in the hands of the few. That is now currently reserves at the bank. And over the past 10 years, since the financial crisis, where's all the QE and the money gone? Into the financial assets, into the wealthy. And who owns those? Well, you could say that it's the 1% or the 0.1% or 0.01% that have got a lot of that wealth. So I think if you look at the comparative systems, of course, Bitcoin's not perfect, but I'd say it's way better than anything that we do have.
Yeah, and don't interpret my commentary there as anything in favor of our existing fiat system at all. All right, well, Alex, thanks so much. I know we're taking time out of your busy day, so I'm going to try to land the plane here as quickly as I can and free you back up. I know the New Harbor guys have a question too, and I want to end on that question because I think it's a real common one that probably a lot of people listening to this are asking. Before I do, though, a couple quick things. So one, just today, this morning, Square just announced that it was investing 50 million into Bitcoin. That's about 1% of the company's assets. But that's it was Jack Dorsey, the CEO of Twitter as well, but he's also CEO of Square. Like that, that's a big endorsement of by a real credible company and a credible sort of tech leader in this. Do you see that as a material step forward in sort of the adoption and whatnot of this?
Yeah, so where we are in the big cycle, a lot of people heard about Bitcoin when it went to $20,000 and then it had this big correction. And a lot of people thought that this was a bubble that was crashing all the way back to where it started. And what's happened in the past 12 months is that more and more people are realizing that this is here to stay and it's the real deal. And there's been big, trusted people come out, voices. Paul Tudor Jones, legendary fund manager, saying, I'm in Bitcoin, my clients are in Bitcoin, I trust this thing. And then a couple of weeks ago, we had a company on the NASDAQ called MicroStrategy say, we had $500 million of cash on our balance sheet, and we believe that sitting those in US dollars is a bad place to keep them. It is going to get debased by all this money printing. And they bought $500 million of Bitcoin. And then today we have Square, which is even more of a household name, announced that they're only doing 1% compared to MicroStrategy that almost went all in. But nobody wants to be first. And then all of a sudden, nobody wants to be last. And this is going to happen, I think, on the sovereign level. If you're a central bank in one of these mid-tier currencies and you see these currency wars going on, people have already started to try and hoard gold, whether it's countries or central banks or governments. It would not surprise me right now if someone was running that money printer, that printing press to buy Bitcoin. And as soon as it gets out that nobody wants to be first and then no one wants to be last, I think the floodgates can open very quickly once the narrative comes out that all fiat currencies are now not a good place to store your value or hold. And when people are doing it on the NASDAQ and household names, I think we're going to see the floodgates open in the next 12 months.
All right, interesting. And it's the parallels are very similar to the precious metals market, both with gold and silver. In other words, if the whole world, went in just a % or two in terms of the average global portfolio, it'd send the prices of both of those to the moon as well, because the markets are not very big. The gold market's much bigger than Bitcoin, but I think the Bitcoin market's bigger than the silver market nowadays. So it's very same logic though, and our audience is very familiar with that. All right, last question before I get to the very last question. So gold and silver have been money for millennia. Because of physical properties that those metals have that we've all agreed, we want in our money. Bitcoin, cryptocurrency can be whatever we want it to be, right? We can design it to be any way we want, right? And we have agreed, enough people have agreed so far to say that, hey, Bitcoin is really good. And we're going to, kind of declare that as sort of digital gold, if you will, to a certain extent. What is preventing somebody from just building a better mousetrap, a better Bitcoin 2.0? And I know there's a bunch of forks and riff off of Bitcoin, but what is preventing somebody from saying, hey, we all got together and we agreed this new thing is actually even better than Bitcoin, and so let's all use that instead?
Nothing, and that is very important to understand. And as you mentioned, there's already been a few forks, and all that means is that because Bitcoin is an open source code, anyone can copy it, and you can make Bitcoin Atom tomorrow because you can just copy that open source code. Now you can tell everyone that that's valuable and it's better, but it's the community, the network effects, the track record. It's not easy to emulate all of those. So we have actually seen 100 Bitcoin copies already, and none of them have ever really caught on in any way. And a lot of these are better technologies. One might be slightly faster, one might be more private, but at the end of the day, it's the network effects in that system, and Bitcoin can actually choose to upgrade the best pieces of the technology. And we're already seeing that happen very, very readily in Ethereum, where it's taking some of the best bits of other systems and other coins and upgrading. And Bitcoin can do that too. But Bitcoin just likes to be very slow and cautious because there's over $200 billion there. So we don't want to make an upgrade and go, oh, whoops, that had a bug. So we want to take things nice and slow and steady. So it actually makes Bitcoin stronger and anti-fragile, we call it, that everyone can attack Bitcoin over the past 10 years and it's never been hacked per se. You hear stories about the websites or people that left their password on their computer, but the Bitcoin network itself has never been hacked, and that's very, very strong.
Great answer. All right. Well, look, there are a zillion questions that I haven't gotten to, and I know that we're going to have a lot of people in response to this video come up with even more. So, Alex, I hope we can have you back on again at some point if you're willing. Before I let you go, though, I'm going to ask probably the question that's on everybody's mind, and actually, I'll let the guys at New Harbor answer this. I think, John, you were the one flagging that you had it, but it basically comes down to, okay, so Alex, you've caught my interest. How do I actually go about buying some Bitcoin? Right, John, anything? Because I know you're getting.
No, that's it, Alex. I mean, we talk to clients every day, and even our savvy clients, Bitcoin and cryptos in general are still quite a mystery. Really down to the logistics of how do you actually buy them? Where do you keep them? The equivalent of opening a bank account, so to speak. Could you speak to that, to demystify that for folks?
Absolutely. So my advice would be stick to the most well-known and trusted websites. Don't go out there and go to something that your friend told you or something that you found on Google search. On our website, for example, we have those most trusted websites, but things like Coinbase, Kraken, these things are very readily available in most countries now, or Binance. They've all got mobile apps. So I would say, download those, play with those, even if you just buy $10 or $20 and start to have an understanding for, oh, this is my address. It's a little bit like my bank account number, and I can send some Bitcoins to Adam's bank account number. But I've got my password and my keys that I need to control because I'm the bank now. I can't just lose those and ring up the bank and say, hey, I need my password back. So that's the thing. It's really your responsibility if you want to start holding your own Bitcoin in your own hardware wallets, which are like a USB stick you can think of. But the first step is buying them off an exchange where they have the wallets and they have the passwords and the keys to your coins, for example. So I would say very much get educated. Do not feel the need to rush in and dive in and throw heaps of money because you want to understand the technology and how to secure these things safely before you go any further down that rabbit hole.
All right. And in terms of getting educated, if people want to learn more about you and follow you in the material that you put out and maybe send you some questions, where should they go?
So nuggetsnews.com.au is our website. We've got the YouTube channel as well. I'm very active on Twitter, so Alex Saunders AU. We've got thousands of hours of free content. And if people want our research reports, we have some premium stuff as well. In the next couple of weeks, we're launching the Nuggets News app, which we've been working on for over a year now. So very excited. And again, that will all be millions of views, thousands of hours of free content there. So, yeah.
Fantastic. And Alex, I'll put your website URL and Twitter handle up on the video when you're mentioning them when we edit this. Alex, thank you so much. Wonderful insights, great articulate explanations. I think you've really helped a lot of viewers out here. Really appreciate you taking the time out of a busy day, especially so early in your day, being there in Australia. So thanks so much. And again, we'd love to have you back on the program at some point in the future if you're game for it.
Absolutely, Adam. As I said, you guys have helped me so much over the years, so I'm very happy to come on and help you guys out regularly if people would like that.
All right, fantastic. Thanks so much, Alex.
Cheers, guys.
Thanks, Alex. Take care.
Alex.
See ya.
All right, John and Mike, another great guest expert. Huge thanks to Dan Rubach from goldsilver.com who put me in contact with Alex and suggested him as an expert. Guys, I guess as we get started here, I'm just curious. I mean, John, you mentioned that you've got your clients that are asking you, questions about Bitcoin and the other cryptos and whatnot. How often do you guys get those questions? Is it sort of 1 out of 100, or is it more frequent than that?
I'd say it depends on what's going on in markets and kind of the headlines. I've gotten more questions on that in the last 3 weeks, I think, than probably the 3 months prior, honestly. But I think there's a lot more folks wondering about it and not asking and vocalizing about that. We're always very careful to point out many of the cautions that Alex, I think, very properly pointed out, and to put this all in context. But we are among the first to acknowledge that the blockchain technology can be a transformative thing, whether it's for cryptocurrencies or other applications, and it's just about not getting too drawn into new and emerging technologies that are still in evolution.
Right. Yeah, it's not actually all that dissimilar to the precious metal space, precious metal mining space, right? Where there are some big names, Newmonts, et cetera, that are, they're pretty quote unquote safe investments, even though any miner is volatile. But compared to sort of the smaller juniors, the exploration companies, et cetera, and whatnot, there's a lot of companies there. The old Mark Twain quote about, and I'm paraphrasing here, but a gold mine is nothing but a hole in the ground with a liar standing on the top of it, right? I think the crypto space is very similar in a lot of ways, but there are some wonderful companies that produce amazing returns if you do your homework and take a portfolio approach. So it sounds like Alex was saying it's actually quite similar in the non-Bitcoin crypto space. All right, guys. Well, let's talk about the markets in the remaining time that we have here. Mike, going over to you. Tell us what you think about the past week. I mean, just looking at the quick data, looks like just sort of another 45-degree march up since we met a week ago. S&P is up about 100 points. The Nasdaq's up about 300 points. It seems to me to continue to be a market that's just, reacting to any whiff of a headline it gets around stimulus. But so far, at least, people seem to think better times are ahead, given the direction that the markets have been heading. But what have you been seeing?
Yeah, I wish that we could say it's drastically different, even though every week we say, Adam, that we hope that there's something new and different to talk about. But it is more of the same this week. We are up about 100 points since we last talked a week ago. And when we talked a week ago here, I think we said the same thing. It was about 100 or 120 points that the market was up. So it's been pretty much in a straight line. The market's been whipping around a little bit based on tweets from the president and other news headlines of stimulus. I mean, just the other day, the market went down sharply when President Trump said that he was going to cancel stimulus discussions until after the election. And then that was kind of walked down and retracted, and the market went straight back up. We're still in a market here that is just, once it decides to go up, it's extremely low volatility. It's literally a 45-degree ruler to the upside. So one thing that's very interesting, though, is volatility. The VIX still remains in the high 20s. Maybe it's at 26 or 27 right now. The VIX has been, the VIX, for people that don't know, is a measure of volatility, and it's calculated by using option premiums. It's a fairly complicated calculation, but essentially what it does is measures risk. The volatility, or VIX, had settled into the 9, 10, 11, 12 range for years. Then all of a sudden exploded to 85 or so. In March, it quickly dropped into the 30s and then the 20s. But here we are in October, we're still in the high 20s. The VIX looks like it's consolidating and still wants to break out. That's a big warning sign. But other than that, there's not a lot different. I mean, gold and silver are consolidating. They're holding key support levels. Gold miners are holding key support levels. It's a position that's pretty constant in our portfolio, and we have hedged pretty tightly at these levels or just below these levels. But and we continue to hold high amount of dry powder in the form of treasury bills, and we're waiting for better opportunities.
All right, John, I'm going to come to you with this question. So I'm going to reference my Twitter account a couple of times now, because I put out a tweet in response to this report that I read. Goldman issued a report a couple of days ago that said that a Biden win will be as bullish as a Trump reelection. And it's one of these things that I think just totally sums up this market, which is that everything is bullish, right? There's just like, there's nothing that is not bullish in this market. I wrote a little snarky tweet like, basically anything and everything is bullish for this market. That's rule number one. Rule number two is if ever in doubt, just refer back to rule number one, right? It's just the environment that we're in. And of course, we've been talking about how these markets just seem to be defying logic. But I do think the reason why, people are optimistic no matter who wins is because they believe, they have a strong conviction that there was a lot more stimulus coming. And I think I just saw some sort of headline, it might've been a tweet, I don't know how official this was, but some speculation that if Biden wins, that there's going to be a $7 trillion stimulus package, which would be just freaking crazy, right? I mean, they'd basically be doubling the U.S. money supply. So I guess my question to you is if we live in this world where, we're just issuing that type of money, I mean, does anything matter at this point in time? Are the people who are sitting here trying to be cautionary and trying to, follow some logic in the market and try to position for a day where there is some sort of breakage? Are they just tilting at windmills if we're literally going to have that type of tsunami coming? And I know you don't know the answer to that question. Nobody really does. But I guess my question is we're in a market where just sort of everything is bullish. What's it like to be a financial advisor in that type of market?
I'm not going to be at all bashful. Mike would say that, we are beyond humbled, dejected, frustrated, disgusted. You pick the adjective, and it's not because of we're sour grapes or party poopers. It's just when you look at it through the lens of data and logic and reality, it is utterly absurd. There's no other way to describe it. And when the headlines talk about what a Biden win would do to markets versus a Trump win, it's kind of like, really the question is, does reality matter anymore? Because, that's really the fundamental question, because regardless of who gets elected and what their policies are, we're still in this huge disjoint from reality that we can go back a century or more of financial history to observe data and really conclude where, at least historically speaking, this has ended. I'm struggling for an apt analogy here, but I guess it's kind of like, let's say you're asking yourself, is it better to walk across that frozen pond with, ice skates or spiked shoes, but not really recognizing that the ice is dangerously thin no matter what you use. It's probably a poor analogy, but the point is we're missing the whole context of, what this debate about policies and whatnot is relative to just how crazily disjointed from the underlying fundamental realities and economic realities the markets are right now.
Yeah, and I wish I had something intelligent to build on top of that, but it is frustrating because I think people that sort of self-select their way over to this channel and sites like Peak Prosperity and whatnot, they're very reality-based. And it's super frustrating to feel like you are placing your bets on reality, but feel like you're losing in the process. And of course, we've talked about past manias and past bubbles. This is sort of the dejectedness that the rational crowd feels near the end of one of these bubbles, because you just feel like, oh my gosh, it's gotten so much more distorted than I ever thought it could. Maybe it truly is different this time. And then some people like Isaac Newton jump back in, and then, then they get crushed and lose everything. So I appreciate you sort of sharing your own personal frustrations there, because I know a lot of viewers feel the same way. All right, guys. Well, with that, we are near the end of our time here. Mike, I'll let you have the last word here. But as you look to what's coming down the road, we've got a U.S. presidential election in just a couple of weeks, which does mean that there is a lot of uncertainty between here and there. But elections do take uncertainty out of the equation once they're over. Are you guys expecting things to get more volatile or less going forward? And what are you doing in the portfolio, if anything, to position for what might be coming?
Yeah, Adam, sure, the markets are likely to get volatile. Everyone's looking at this election as being a very important election, the most important since 1860, and it probably is, who knows. But short-term volatility aside, what is going to happen to the market is baked into the cake in our view. Valuations are screaming high. I mean, historically high, higher than ever before, at a time where growth and GDP worldwide is going down. We're nearing the end, we think, of what central banks can do. At the same time, almost everybody you talk to and see on the financial media says they're just getting started and there's no end to what they can do. So, yeah, it's beyond frustrating. In the portfolio, we're not really going to do much different. We're already very, very cautious. We're over 2/3 Treasury bills and cash and dry powder. We have our key positions hedged with collars and other hedging positions. So, whatever happens doesn't much matter in our portfolio. We will we'll be looking forward to take advantage of any steep declines. If they happen, I think we're going to have to see pretty substantial declines to start nibbling in the market. And even then, it would be very hedged. So, yeah, what's going on in the market's baked in the cake. I mean, really, if you look at the market in a big picture sense, it looks to us like it's been trying to correct for the last 20 years. 3 big bubbles, 2 big crashes. Every single time it tried to correct, it hasn't been able to. We've moved to a higher median or average valuation. We don't think that that's going to last. And, the unwinding of it is probably going to be very destructive. And that's what we're spending our lives and our careers trying to protect against. And that's why we come here every week and say the same thing. Because it's easy to get emotional, and that's the human nature part of it. And the only way to not get emotional is to rely on the data. And that's what we do every day, all the time. So be careful. If anyone wants, before the election or any time, to have us look at the portfolio, offer some advice in terms of hedging or reducing risk, no time like the present. The markets are right near their all-time highs.
All right. Thanks, Mike. Yes, if you're watching and haven't taken New Harbor up yet on that offer, which is a free, no commitments involved portfolio review, and hearing their advice on what they think you should do given your own personal situation. Stick around to the end of this video, which is coming up in just a couple minutes. We'll give you all the instructions on how to very easily and quickly schedule that conversation with them. All right. Well, real quick as we wrap up here, every week there's somebody that asks me, hey, can you bring on somebody to make the bull case? I'm just letting you all know I am in conversations with folks to try to land a guest to do that. It is harder than you would think. Not that people aren't bullish, but I think a lot of these analysts are a little bit skittish to go on record being bullish at a time where they think, maybe that could be disproven quite quickly. And so, nobody likes to get pie in their face, obviously, but there are a few folks that I am in conversation with. Hopefully we'll have them on soon. Secondly, if you haven't liked the video yet, please just take a quick second and click the like button below. It really does actually make a difference how many likes the number of likes these videos get in terms of how far YouTube promotes them far and wide. If you haven't subscribed to my Twitter feed yet, please do so. It's @MenloBear. Amongst other things, that's where I talk about who we have lined up as future guests. Like we had Jim Grant the other week, phenomenal guest. We've got another big name like Jim coming up in just a couple of weeks. I've announced it already on Twitter. I don't like to announce it in these videos just in case things change in the future. But if you're curious, get on Twitter. And then lastly, if you haven't registered yet, we've got the Peak Prosperity annual seminar, which is digital this year due to COVID. So here's the URL, peakprosperity.com/seminar 2020. I've talked about it in previous programs here, so I won't do it on this one except to say it is going to be freaking amazing. And if you just look at the guests we have at that URL, I think you'll agree. With that said, John and Mike, thanks so much again, guys, for another great week. Not a week goes by where I don't get at least several emails from folks thanking me for the services that you guys have been offering them, those free consultations. So thank you so much for continuing to do that public service. And I will see you guys again in a week, as we do every week, reviewing what the markets have done and looking through our lenses and trying to see what's going to come next. Thanks so much, guys.
Thanks, Adam.
We look forward to it.
See you next week.
If you'd like to schedule a consultation with the financial advisors at New Harbor Financial, simply go to greylockpeak.com. These consultations are completely free and there are no strings attached. The good folks at New Harbor will simply answer any questions you have about your investment goals or your portfolio and give you their best advice given the latest market outlook. They're willing to do this because they care about protecting people's wealth and because Peak Prosperity has connected them with so many thoughtful investors just like you over the past decade. Chris and I started doing this because so many people have approached us in frustration and are looking for a solution because they're feeling out of alignment or just downright ridiculed by the standard sort of financial advisors who have been managing their money. You know the type, the kind that just pushes all of your money into the market, scoffs at the idea of owning gold, and when you bring up concerns about the market's sky-high valuations, they say, don't worry, the market's always going to take care of you. For many of the reasons discussed in today's video, we think this is one of the most challenging and treacherous times in history for investing, which is why we strongly believe that today's investors are best served working in partnership with a conscientious professional advisor who understands the risks in play. Now, we're agnostic which professional advisor you'll work with, just as long as they're good. If you're already working with one, that's fantastic. Stick with them. But if you aren't, or you're having trouble finding one you respect or trust, then consider talking to John and Mike and the team at New Harbor. And for those about to ask, yes, there's a business relationship between Peak Prosperity and New Harbor, which we had to put in place to make sure that everything is handled according to SEC regulations. All the details on this are clearly provided on the greylockpeak.com website. Also, it's important to note that New Harbor is able to work with U.S. citizens, green card holders, and those with existing assets in the USA. But for regulatory reasons, they aren't able to take on non-U.S. clients. All right, with all that said, if you'd like some insight and guidance on how to protect your wealth during this unprecedented time in the markets, go to greylockpeak.com to schedule your free consultation with the good folks at New Harbor. Thanks for watching.